Switching home insurance providers can actually cost you more than staying put. Your claims history follows you, your property gets re-inspected, and one mistake in timing can leave you underinsured. Most homeowners only find this out after they've already cancelled the old policy. I've spent nearly a decade reviewing exactly what happens inside an insurer's system when a new application comes in. I've seen what gets flagged, what gets priced up, and what catches homeowners off guard. 3 things: claims history transfer, coverage gaps, and inspection triggers. And the third one, the inspection trigger, is the one that costs homeowners the most. I'll show you exactly why in a moment. By the end of this video, you'll know exactly when to switch, what to watch for, and how to make sure you actually end up better off. Let's get into it. Here is the thing most people don't understand about switching insurers. You are not just changing who you pay, you are triggering a brand new underwriting assessment on your property. Your existing insurer already knows your property. They have years of history. They have your claims file. They have inspected the property and made their risk decision. Your new insurer knows nothing. They are starting from scratch, and they are going to find out everything your old insurer already knew, plus anything that has changed since. For most homeowners, it looks like the switch went smoothly until the new insurer finishes their assessment. But for some homeowners, and this is what most brokers won't tell you before you switch, the new underwriting assessment reveals something that changes the outcome entirely. And it is a gap that shows up in 3 very specific ways. Most homeowners who switch and end up worse off share one thing in common. They made the decision based on a quote, a number on a screen. A figure a comparison website showed them before the new insurer had done any assessment at all. That initial quote is not a guarantee. It is an estimate based on the information you provided at the time of application. The actual premium, the one you pay, is determined after the insurer has reviewed your claims history, assessed your property, and run your file through their underwriting model. For homeowners with clean files and well-maintained properties, the final premium usually matches the initial quote closely. Sometimes it is even lower. But for homeowners with condition issues, claims history, or properties in higher risk postal codes, the gap between the initial quote and the final premium can be significant. And by the time you find out, you have often already cancelled your old policy. That is the moment most people realize they should have known more before they switched. Here is what you need to know. Hidden risk 1, your claims history transfers. This surprises almost everyone. When you apply for insurance with a new provider, they run your claims history through a shared industry database. In Canada, this is managed through an insurance bureau database that most major insurers contribute to and draw from. Your claims history from your previous insurer is visible to your new insurer. All of it. Every claim you filed in the last 6 years, water damage, theft, liability, goes with you. This means switching insurers does not reset your claims record. If you have 2 claims in the last 4 years, your new insurer sees those 2 claims. They price you accordingly. What this means for you if you have filed 2 or more claims in the last 6 years, switching is unlikely to produce the savings you expect. The new insurer will price the risk the same way your current one does because they are looking at the same data. If your claims record is clean, 0 or 1 claim in 6 years, switching is genuinely beneficial. Your new insurer sees a low-risk file and prices it competitively. The lesson: know your claims history before you start shopping. It is the single most important factor in whether switching will help you. Hidden risk 2, the coverage gap. This is the most dangerous mistake homeowners make when switching. They cancel their old policy before the new one is confirmed in writing. There is a window, even if it is only 24 to 48 hours, where you can be uninsured. If anything happens to your property during that window, you have no coverage. A fire, a burst pipe, a break-in. Any of these during a coverage gap means you are paying out of pocket for everything. The correct sequence is this. Get your new policy confirmed in writing first, set the new policy start date, then cancel your old policy effective the same day the new one begins. Never the other way around. There is a second coverage gap risk that is less obvious. Some new policies have exclusions or waiting periods for certain types of claims in the first 30 days. Read the new policy before you cancel the old one. Make sure you understand exactly what is and is not covered from day one. Hidden risk 3, the inspection trigger. Now, here is the one that costs homeowners the most, and it is the one almost no broker mentions before you switch. When a new insurer takes on a property, they often conduct a fresh inspection. They are not relying on your old insurer's assessment. They are sending their own inspector or using aerial imagery to evaluate the property from scratch. For properties in good condition, this is not a problem. The inspection confirms what your application said and the policy proceeds normally. But for properties with condition issues, a roof approaching 20 years, old wiring, deferred maintenance, the inspection reveals problems your old insurer had already priced in, or had simply not re-evaluated recently. Your old insurer knew about the aging roof and had been gradually increasing your premium to account for it. You switch because you found a cheaper quote. The new insurer inspects the property, flags the roof, and comes back with a premium that is higher than what you were paying before, or declines to offer coverage at all. This is the most common reason switching backfires. The homeowner found a lower initial quote that did not account for the inspection outcome. What you can do before switching: get a home inspection done independently. Know the condition of your property before you apply to a new insurer. If there are condition issues, address them first, or factor the inspection risk into your decision to switch. Here is the mindset shift that changes how you think about switching insurance. Switching is not a transaction, it is an underwriting event. Every time you switch, you are asking a new insurer to make a fresh risk decision about your property. That decision is based on your claims history, your property condition, and your location. All three of those factors follow you regardless of which insurer you choose. The homeowners who switch successfully are the ones who understand this. They know their claims record, they know their property's condition, and they time the switch correctly. The homeowners who switch and end up worse off are the ones who shopped on price alone, without accounting for what the new insurer would find when they looked. Before you switch, ask yourself 3 questions. Is my claims record clean? Is my property in good condition? And am I switching at the right time? In the 60 to 90-day window before renewal. If the answer to all 3 is yes, switch. If the answer to any one of them is no, wait until it is. The right way to switch. Step 1. Pull your claims history. Know exactly what a new insurer will see before they see it. Step 2. Get an independent property inspection if your home is more than 20 years old. Know your property's condition before the new insurer does. Step 3. Get the new policy confirmed in writing before cancelling the old one. Same-day transition, no gap. Step 4. Compare the full new policy, not just the premium, coverage limits, exclusions, Deductibles. A lower premium with reduced coverage is not a better deal. Switching home insurance providers can absolutely save you money. For the right homeowner at the right time, clean claims record, good property condition, optimal timing, it is a straightforward process that produces real savings. But for the homeowner who switches without understanding what the new insurer will find, it can cost significantly more than staying put. Know your claims record, know your property's condition, time it right, and never cancel your old policy before the new one is confirmed in writing. If you found this useful, subscribe. I publish one of these every week. Everything I cover comes from nearly a decade of working inside the Canadian insurance industry. I've put a link in the description to compare home insurance rates from multiple Canadian providers. If you're in the 60 to 90-day window before your renewal, that's the right time to run the comparison. And if you missed the earlier videos in this series, I've covered how insurers price your premium, when to file a claim, how non-renewals work, and the 6 property risk factors that affect your coverage. All 4 are linked at the end of this video. See you next week.